Hello everyone and welcome back to the channel. My name is Kevin Holcomb. I've worked in the mortgage industry for the last 8 years. I've helped thousands of people purchase homes and refinance and do all these things. So today, what we're going to talk about is co-signing for other people's debts and how that affects your ability to buy a house, or how it could affect you. So here we go. So I wanted to bring up this subject because it does come about from time to time. A lot of the times when someone's looking to buy a house, sometimes even when they're refinancing, but it's mostly when they're looking to buy, is you have people that have co-signed for like an auto loan for their son or daughter, or for a family member or something along those lines. And they may not qualify for what they're looking to do because they have this extra debt that shows on their credit report. It will show on there if you're co-signed for somebody, because you're technically also, if you're co-signing for it, you have to pay that debt. If that other person doesn't pay it, it affects your credit as well. So that's how co-signing works. And that amount, I mean, it could be $300, $400, $500, $600 a month of debt that's being hit against you that isn't technically yours, that you're responsible for paying or have been paying. Someone else is paying it, the person that is actually using the vehicle, or the person who's getting the education, it's a student loan, whatever the case may be. So when we look at things like that, we want to say, okay, well, what can we do to not have to hit you with that debt against your income when we're trying to get you qualified to buy a house? And there is a way of doing it. So when someone co-signs on a, like let's say a car loan, that's probably the most common. I don't see co-signing for student loans nearly as much. It's mostly car loans. And it's usually enough to keep that person for qualifying for what they want. Because like I said, $500, $600, when it comes to your debt to income ratios, it's pretty significant. And you don't really get those changes unless you're paying off a huge debt, or you're buying a lot less, or putting a whole lot of money down. So in order to avoid those circumstances, we have to take another approach to it. So when you actually do co-sign for that car loan, whatever it is, your name has to be on that paperwork with that person. You can't buy it under your name and then you give it to someone and say, well, this person makes the payments. It doesn't work that way. They have to be on it as well. They also have to be a co-obligor, which is a really weird sounding word, but that's what it is. An obligor, the person who's obligated to make the payment. It's a really weird word, that's why I want to try to say it as much as I can in this video. Obligor. So if you're on that original instrument, whatever it is, if it's the car note, the loan, whatever, that's good. That's what you want. Your name wants to be on there. Now what you have to do is you have to prove that the other person who's actually using the car has made the last 12 payments on it on time. So they're not delinquent in any way. They made the last 12. And usually we show that through bank statements. We say, okay, well, you need to give us proof that this person has made the last 12 payments. So usually the last 12 months of bank statements. Kind of sucks. It's a lot of downloading. Please don't print it all up. It's a giant pain in the butt. Just download them. Download your last 12 and you should be able to see that payment for the right amount going out once a month. And that's usually the only thing that you have to show. But you do have to show it, and then bam, we don't have to hit you with that debt anymore. Because that debt could be the difference between being able to buy and not. Or being able to buy what you're looking for and settling. It's a big deal, especially with how expensive car payments are. So I wanted to bring that up and use the word, obligor as, again, because it sounds really weird, but that's what it is. And these rules affect FHA financing and conventional financing. I don't know if VA has anything different about it. Usually VA will follow FHA with a lot of stuff when it comes to credit. So I don't think there's anything different with even VA financing, but essentially that's what you have to do. You have to show they've made the last 12 payments. And I mean, you can't be off by anything. You can't be like, well, they bought the car 11 months ago, or they bought the car 16 months ago, but we got this deal where they didn't have to make a payment for 4 months, or whatever those newer deals are. You have to show 12 consecutive on-time payments, and there's no way around that. I remember actually this is a few years ago now, we were doing a cross approval for an agent that is one of our agents and one of our friends, saying, hey, I got this package, I've got this buyer that wants to buy a house that I'm listing. Can you do the cross approval on it? We say, yeah, sure. What we do is we reach out to the other lender. We get the basic information from the file. Like we look at a credit report. We'll look at their pay stubs, W-2s, their asset documentation. We'll look at the same stuff they did and confirm that they did their work properly. And we've had ones that were, it's almost there, but something was just a little off and it would have kept that person from being able to buy that house. One of those things was an auto loan that was being omitted because that person had co-signed for it. They said, well, do you have the documentation showing the other person's made 12 payments? And they said, oh, okay, hold on, I'll get that to you. They gave it to us, there was only 11. So we're only off by 1 month, but that person's wanting to buy that house right then and there, and they want to close before that next payment would go out. They can't do it. And they weren't able to do it, and we let them know, you're off. This person needs to wait another month if you want to be able to do this. And so it could be something that small that could be the difference between qualifying and not qualifying, and it's depending on who's looking at your stuff. But that's something to be aware of. You can co-sign for somebody else on an auto loan and still buy a house and still try to qualify for what you're trying to buy, as long as you can show that they've made 12 payments on time. So that's it for me, guys. If you enjoyed this content, please leave a like on the video. Comment down below if you have any questions. A lot of this stuff gets very convoluted and it's very specific to you and your questions and what you have going on, but leave a comment below. And if you haven't already, subscribe to the channel. I've got videos on all these different various subjects when it comes to buying a house. And yeah, the more that people look at them, the lets me know what kind of content they're looking for. So that's it. Have a good one. Peace.